Hey everyone, welcome back to Zeconomics and with me Teacher Z. So for today's video, I'm going to explain about the question paper from IGCSE Paper 1 Accounting, period of May and June 2021. Okay, and this is the question. This is for the questions number 2. Let me just change the color of the pen into, let's just say, blue. Okay. All right. So the question is, what increases owner's capital? Okay. So you will be presented by 4 options. A, bank loan extended from 5 to 10 years. B, purchase of inventory on credit. C, purchase of machinery by check. And D, transfer of vehicle to business from private use. All right. So the keyword now that we're going to tackle is capital. Okay. So before you attempt to answer the questions, you need to understand first the definition of capital. Okay, so what is capital? Capital. This is the common term in accounting. Okay, so capital is basically being used whenever someone wants to start their own business. So the definition of capital is any resources, provided by the owner of the business. Okay, so capital is any resources provided by the owner of the business. Now, the most common type of capital will be money. Okay, that is the most common type. Common type of capital. Okay, so let's just say, for example, you want to start your own business and you require some money, okay, to start your own business. But anything provided for a business by the owner represents capital, but it's not necessarily in the form of money, okay? So it's not always in the form of money, but it can also be in the form of, for example, this one, building, okay? Building or premises, or it can also in the form of vehicles, okay? Cars, motorcycles, any vehicles that you own, for example, trucks. And then it can also be in the form of goods or supplies. All right. So I'm going to give you example to explain these questions. Let's just say you want to start your own business. Okay. And you have $5,000 cash as your saving. All right. So this would be your capital or your resources to start your own business. So you invest your money, $5,000, invest your money, $5,000 into your to start your own business. So so $5,000 now act as your capital for the business. Okay, so this business is owned by you. Okay, this money is owned by the business. Now, so you might probably wondering, how come the money now is owned by the business and it's still my money though? You might be wondering like that. Well, before you invest your money into your business, that money was yours. But once you invested that money into your business, that money belongs to the business as a capital. But the owner of the business is still you. All right, but it's not your money anymore because we need to differentiate between the business's money and personal's money. All right, those are the two different things. So again, once you invested your money into the business, then that money belongs to the business. All right. So, but you might be wondering now, or you might be thinking, okay, so what if I don't want to invest money into my business to start my own business? Instead, I just want to use my car as my capital to start my own business. Okay, so let's just say you have a car and it's worth $5,000 as well. Okay, so you want to use this car as your capital to start your own business. Okay, so now this car doesn't belong to you anymore, but instead it will belong to the business itself. Okay, because you are giving this car to your business as your capital. So this business has a car to be used as its own operations. Okay, so those are two different things or two different capital types that you can use to start your own business. So let's take a look into the question itself. What increases owner's capital? All right, so option A, bank loan extended from 5 to 10 years. Bank loan is not part of the capital. Instead, it's a liability, something that you need to pay to other party. All right, so bank loan is not a capital. Okay, it's a liability. B, purchase of inventory on credit. Purchase of inventory is not increasing the capital, but instead it's increasing asset. And then because since you bought it on credit, so this will also increase your liability. Okay. C, purchase of machinery by check. The purchase of machinery also increases asset. Oops, asset. And since you are using check, which is in this case by the bank, of course, your asset at the same time is also decreases. Decrease asset. Okay, so we only left with option D, transfer of vehicle to business from private use. This is basically similar to the one that I already explained to you, that you want to start your own business, but instead of investing money into your business, you just invest your own car into your business. So D is the correct answer to answer these questions. Okay. Okay, so hopefully that will help you to understand this basic concept of capital. And don't forget to like, comment, and subscribe if you want to find another answers or another topics. Don't forget to follow this channel. Okay, so until then, thank you so much for watching, and I'll see you then. Take care and ciao.